Hi guys, welcome to our gold price daily analysis. Today is Tuesday 12th of February 2019. This video is brought to you by the coach. If you are a new subscriber, welcome aboard and thank you for joining us. We do urge all of our channel members to spread the word and help us gain more audience, by which we could work on enhancing the content and the context of our videos. We will start as usual with the frequently asked questions. We have received this comment. Coach, the price range specified in your videos rarely hit. There are three considerations affect the matter in question. The first one is that our service is to provide you with analysis. We do value your time. Instead of you spending your precious time searching the internet for information, we do this on behalf of you. The second consideration is that our core is to provide you with the analysis, not a trading signal. If that wasn't the case, we would have been on some other social media platform like Telegram or Twitter selling trading signals packages. The third one, considering what we have mentioned, we still provide some sort of trading signals, which happen that to be accurate all of the time so far. We will start our core analysis with a recap. We said in our previous video that we are waiting important economic data to be released from UK. Data were released and did not meet the forecasts. We got the manufacturing production below forecast and below last reading. We got the gross domestic product GDP month to month below forecast and below last reading. We got also gross domestic products year to year below forecast and below the last reading. We hope that UK economic data could come positive. By then it may cap the US dollar from grinding up higher. But unfortunately, as we said, it was the other way around. For the trading strategy in our last video, we said buy from 1302 to 1308 and protect your account up to 1295. If you did this today and you bought from 1302 to 1308, you are still safe. Stay and keep watching carefully the market. Let's move on to the fundamental news for today, Tuesday. What do we expect? On the calendar, we have some important economic data to be released from USA and UK. The most important thing is that the Bank of England Governor Carney is having a speak tomorrow. This is could affect the market, including the gold. And we have also the Fed Chair Powell is having also a speak tomorrow, and this will affect surely the gold and the dollar. Let's do the technical analysis. Trading range for today was 1303 to 1315. The numbers are rounded and the market is still open. For the closing price, considering that the market is still open, we are expecting it to be 1308 to 1309. The moving averages, 20 days is 1300, 50 days 1278, and 100 days 1249, and for the 200 days is 1231. The gold is still trading above the moving averages. The RSI for hours 42 in the medium. The RSI for the 1 day is 57, still in the favor of the bulls. For the supports and the resistance, we have the resistance of 1314 and 1317, 1320, the supports 1306, 1300, and 1296. The conclusion: trend is still bullish. The price action is negative. Unfortunately, today's close could be less than the close of the last trading session. And what we hope is that the dollar rally could lose some steam, and this will be in the favor of the gold. The summary: basically trade carefully, and you don't need to open new positions. Wait until we get a clearer picture on the market. In our trading hint for today, we are going to talk about an interesting topic, which is yielding assets versus non-yielding assets. In order for us to reach a clear understanding of this topic, we shall go on a round trip throughout the history of financial markets. Let's start from the very beginning. This human being exhibited before you is claimed to be our ancestor. If you look at him closely, the poor guy almost got nothing. However, this simple, humble creature got a gift. He is and he has been always a dreamer. He dreamt of a better living, more food, more clothes, and a never-ending I wish to list. A part of his dreams of food and day-to-day living, or more precisely managing not to be killed or hunted, he had dreamt of what we call it today the marketplace. The marketplace is a place where he could exchange his gathered or hunted stuff for another stuff he needs. And most likely he died or he got himself killed before he had seen his dreams coming true. An interesting fact about the human race that we could pass our dreams, or basically the unfulfilled ones, from a generation to another until they get fulfilled and they become a part of our reality. And those dreams, they evolve as same as we do evolve. People started to have solid businesses and could engage in partnerships or communities, corporation-like, to fund a particular business or to expand an existing one. On the outside of 68 Wall Street, on May 17, 1792, an agreement was signed under a buttonwood tree by 24 brokers, and by which the New York Stock Exchange and what we call it today the Wall Street was founded, and this agreement also referred to as the Buttonwood Agreement. Similar to other things human beings may have dreamt of, it took us a long time to reach to what we have today. Take for example flying. A human dreamt of flying since ever, but the first successful, sustained, constructive, controlled trial was done by Brothers Wright on December 1903. Same applies on financial markets. The very beginning of the financial market was as simple as to raise capital or to transfer ownership. Then it got more sophisticated. New tools or instruments were introduced, either to forecast the future or to hedge it. These tools or the instruments, we call them derivatives, basically futures and options. And the first launched traded future contract was on 1972 by Chicago Mercantile Exchange. There is a misconception arises around the word forex. People, even traders and professional traders sometimes, and for the sake of simplicity, they refer to the word forex, to the all traded futures and options in the market, including the indices, the metals, and the commodities, and the currencies. But the word forex, it represents two parts. The first part is for foreign and EX for exchange. So it's a place where you can exchange rates or foreign currencies. Back to the yielding versus the non-yielding investments after this introductory. The yielding assets are the assets that generates earnings on the investment over a particular period of time. These kind of earnings, we call them either dividends or interest. The non-yielding asset does not generate earnings, like gold or cryptocurrencies, they don't generate earnings. What we have with us right now is a quote. It says, how many millionaires do you know who have become wealthy by investing in saving accounts? I rest my case. This is for Robert Allen, one motivational speaker, American speaker. Thank you guys for watching this video. Please like, share, and subscribe, and I'll see you tomorrow.